Isaac, I've been delving into the numbers and looking at all the components. You've, of course, got corporate credit demand, household credit, but a key part that stood out for me was the investment credit division there, averaging 8.2% year-on-year in Q1 and falling back to just 1% year-on-year growth for the month of April. What does that mean to you?
Samantha, I looked at the numbers too, and really what stood out for me was that corporate credit number. I mean, after some strong growth we saw from December last year, we saw a drop in corporate credit during the month, and that really was behind that slowdown in unsecured credit that we saw during the month. So basically these numbers say to me that, they just reflect what is happening in the economy. The economy is sort of moving sideways at the moment, no real strong growth in the economy, and we don't really expect strong growth for the remainder of this year.
Okay, so let's look at where the economy is at right now, because we saw that quarterly figure coming through for GDP of 2.7% quarter-on-quarter growth, a slowdown from Q4 but beating expectations. But S&P coming out today and revising down South Africa's growth outlook to 2.7% from 3.1%. And the likes of Numera are setting growth at 1.7% for 2012. Where do you stand in terms of the overall growth numbers that we are going to see right now?
Our forecast as Nedbank is 2.7% for this year, down from 3.1% last year. I mean, when you look at this economy, there's no really strong momentum in this economy. Demand is not very strong. Exports have been impacted by what's happening in Europe. I mean, over the past couple of months, we've seen the manufacturing numbers, which are not very satisfactory. The mining numbers, partly reflecting, the impact of the strike, mainly in the platinum sector. But generally, it's not a very exciting year in terms of growth.
Well, that makes a lot of sense given the state of the global economy right now. But let's look at local factors and how they might impact us further down the line. Household credit growth continues to grow. It grew by 7.2% year-on-year for the month of April from 6.8%, and worrying that the growth is coming from a rise in unsecured lending. As you say, we have seen somewhat of a pullback from that, but that's costly lending. What does that mean for the health of the consumer as we go forward with them taking out such costly loans?
Well, the way we have to look at it is let's look at other components of household credit. For instance, the numbers that came out today show that mortgage growth was zero in the past month, i.e. there was no growth at all. So when you look at these numbers, I say to myself, what's happening here? We could find a situation in which, for instance, households are taking unsecured credit and using it mainly to improve their residences or that sort of spending. So it really tells me that what we are seeing here is some shift in spending patterns. It doesn't necessarily mean that, this continued strong growth in household unsecured credit means that, there is a sort of excessive consumption by the household sector, but it could mean that, this credit goes to fund other activities, such as, for instance, spending on real estate.
And it's interesting that the likes of Able saying that they only lend out loans, or they try and only lend out loans for education, for buying houses. So that is a positive. But overall, are there any other positives that we can look at right now from an economic perspective? Because it seems that we continue to have more and more bad news coming out from the local economy, Isaac.
I mean, looking at these numbers, they are encouraging to me. Why do I say that? Looking at what the economy is doing at the moment, you look at the job market, very weak. You look at debt levels. I had expected a very high level of deleveraging at this stage. But what we are actually seeing is that continued uptake of credit by households in particular. So for me, that is encouraging. At least consumer spending is continuing to support this economy, because without consumption at the moment, we would probably be contracting. So that should sort of continue giving the economy some boost during the remainder of this year. But what we are really worried about, is the international economy to really get the 7% growth number that we need. We're going to have to start seeing our exports going up very strongly, and that is a question of the state of the global economy.
Yep, Isaac, that's a comment that most are saying. And in the meantime, the markets here in South Africa have closed on a negative note. Isaac Matshego joining us from Nedbank, an economist at Nedbank.